Hello, I am Alex, Trusted Partner Title's personal AI avatar. We will be covering topics that will benefit you not only today, but the days ahead. Let's get started. Signed contract. For sellers and buyers alike, a signed sales contract doesn't mean the house is sold. There are still financial, contractual, and legal steps for both sides. The buyer may need to get financing to meet the contract terms, which includes credit checks. The property is inspected and appraised, title insurance and escrow accounts are set up while the seller locates new housing, packs, and moves. Before closing, both parties need to take care of any obligations, like inspections, painting, or repairs. After the contract is signed, it can take a month or more of closing steps to reach the closing meeting. Closing costs simply refer to the fees for various things associated with the escrow process in a real estate transaction. For the closing, you'll present your paid homeowner's insurance policy or a binder and receipt showing that the premium has been paid. The closing document will then list the money you owe the seller, remainder of down payment, prepaid taxes, and so on, and then also the money the seller owes you, unpaid taxes and prepaid rent if applicable. The seller will provide proof of any inspection, warranties, and so on. Once you're sure you understand all the documentation, if there is a loan involved, you'll sign the mortgage, and you'll also sign a mortgage note promising to repay the loan. The seller will give you the title to the house in the form of a signed deed. You'll pay the lender's agent all closing costs, and in turn, he or she will provide you with a settlement statement of all the items for which you have paid. The deed and mortgage will then be recorded in the State Registry of Deeds, and you will be a homeowner. There may be closing costs customary or unique to a certain locality, but closing costs are usually made up of the following: attorneys or escrow fees, yours and your lender's if applicable, property taxes to cover tax period to date, interest paid from date of closing to 30 days before first monthly payment, loan origination fee covers lender's administrative cost, recording fees survey fee, first premium of mortgage insurance if applicable, title insurance, yours and lender's, loan discount points, first payment to escrow account for future real estate taxes and insurance, paid receipt for homeowner's insurance policy and fire and flood insurance if applicable, and any documentation preparation fees. You might have a few questions about title insurance. What is title insurance, and why should any buyer get it when purchasing a home? Title insurance prevents the property owner from suffering financial loss if, at any time during his ownership of the property, someone comes along who can show that they have full or partial ownership of the property instead. A careful title search is done at the time property changes hands. On rare occasions, mistakes are made anyway. Property can change hands in a number of ways, including by deed, by will, and by court action. Typically, these proceedings are recorded in different places. Searching the history of ownership to be sure nothing has fallen through the cracks with lenders, lien holders, government offices, etc., is a job that requires alertness, intelligence, and skill. It is very likely that the value of your property will go up over the years. As time passes, these elements are likely to result in your home equity being your largest asset. Just how devastating would it be if you eventually discovered that someone else owned what you'd always thought was your home? When you buy a home, buy title insurance. For additional information, visit our website at trustedpartnertitle.com. Our hours of operation are Mondays from 9 a.m., 4 p.m., and Tuesday through Friday 9 a.m. to 5 p.m. We hope you enjoyed our video, and we look forward to working with you.